Greetings, Dr. Jeffrey Scott. This is my weekend market update for June 21st, 2025. I titled this one, Markets Turn Lower as Missiles Fly and the Fed Disappoints the Bulls. The Fed meeting, I think we're still digesting what we learned from that, although it's been several days since they met. Don't look like they're coming to save the Bulls anytime soon, do they? Again, my name is Jeffrey Scott. And let me change one thing on this slide. Oh, I still do. There we go. I just wanted to add my marketmripro@gmail.com email address and the name of my Google group. You'll see why in a few moments. Disclaimer, this is for educational purposes only. Anything we talk about should be taken in the spirit of education and not be considered investment advice. The intent of the video is to demonstrate the tools of top-down analysis and how I apply them. Trading involves risk, and you alone are solely responsible for any decisions you make. I may own or intend to buy or sell any stock mentioned in this report. Trading stocks and options should be considered risky and should consult with your financial advisor before making trades. And as most people are aware, I have tools in multiple platforms. If you're looking for my wealth charts video, you'll find it before the open on Monday morning at stocksanddocs.com. This video will be predominantly using Market MRI Pro, which is my own tool. Speaking of Market MRI Pro, I'm going to officially launch it this July 4th. I've had a soft launch. I've got a number of people on it. They've helped us figure out a few of the things that we needed to fix, and we're ready to take it to a broader audience. It is an application. It is not an indicator. It is a complete trading system, although I don't hook to brokers. It includes data, which is not streaming, but is updated real time. It is going to retail for $19.95 for year one. It will be an annual renewal, which will be in the $4.99 to $5.99 range, depending upon data cost and how many subscribers we have, but no more than $5.99. You'll get all updates and upgrades of the things that I use. If I bring in a third-party educator, of which we have one that's already done, they'll be marketing it themselves at their own price for their add-on. I don't control that. I'm going to give $100 off, and will always do if you're part of the top-down trader group. And then since it's 4th of July, I'd like to give another discount, which will be $300 off because of 4th of July. People that own my tools and other programs know that I give additional discounts. You will get the lower of this price, or the what I call the stacking discounts, where I give $200 off for each of the programs you already own, such as my Trading Station app, my Wealth Charts Marketplace app. For the first time, we're going to also give a 2-week free trial. All you got to do is go to Top Down Trader and sign up, and then send an email request to me at marketmripro@gmail.com. And then I am going to do a webinar on Wednesday, June 25th at 8 p.m. getting started with Market MRI Pro. You'll see links to the video, to the webinar in the remarks section or in the Top Down Trader user group. Speaking of Top Down Trader, it is free. As you just heard, I will actually give you a discount if you join it. Just go to Google Groups, log in with your Google ID, go to find Top Down Trader, no hyphens, sign up, and you'll get added to my nightly mailing list. Is there a recession in the near future? There's always a recession in the near future. You can see the gray bars represent the recessions. They recur not after when we revert, have a yield curve reversion or inversion less than zero. They occur sometime after we correct. You can see steepening of the yield curve over here on the 10-2 year. So at some point we're likely to have a recession, but there's no evidence that we have one right now. If you look at credit tightness, we don't see it. If you look at the June data from this past week for the diffusion index, it came in at -4. You get recessions from -20 or below. So I think we're okay right now. So is there a recession in our near future? There's always one in our future, but I don't think it's tomorrow. Know your news and earnings. We got a lot this week. We got some PMIs. We've got some consumer confidence. We got jobless claims. We got revised GDP, and we've got PCE complex, all of which are important to the Fed. We also got the Cleveland Fed president speaking a couple of times. We got Powell to the House Financial Services Committee. So hopefully won't introduce too many new things, but I think he's going to start to get pressured, especially um, with the allies of the president, while we're holding fast while the rest of the world is starting to cut. Fed's late to recognize inflation, and I think they're historically late to lower, and that's nothing new this time. If we look at earnings, you'll start to see some big names here. You've got some home builders. You got FedEx. That'll give you a sense, I think, of the general economy from the shipping perspective. Micron and the semiconductors. You've got Nike. So we got some earnings this week, not a busy week. And as I say in the lower right-hand corner, it's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. I always like to build a list of leaders when I do live meetings. We look for stocks that start in the lower left-hand corner and go to the upper right-hand corner. And the reason we do a leaders list is Ian taught us a long time ago that leaders will roll over before the market. So we actually had a breakout at the open on Friday from our leaders list, and then it had a reversal and kind of a doji looking spinning top pattern. Hasn't broken down yet, holding above support. Let's go to the charts. Again, my top-down trader group, it's free. You get discounts, and you get mostly nightly emails and videos from me. And hopefully we'll be doing a program live. We just did our Orange County one. I'm talking with my friend John Person and his wife about do we do one later this year somewhere not in Florida, or do we do something in Florida? So we'll find something out soon about that. So we're going to go into the tool. I'll walk you through how I do my nightly analysis and see if we can't find anything that looks interesting here. I think the market is not without risk, and that always has to temper what I'm going to do. I start with the one-day close. I rank it, and we see volatility was the leader at 1.17. Dollar was down, and everything else is negative. Everything else includes Bitcoin, which was down 0.5%. The spider led to the downside 0.5, Q's 0.44, Diamond's 0.25, and Russell 0.21. If we look over here, we can see they all were in the bottom quarter or so of the daily movement. Volatility in the upper 2/3, and the dollar up at the top, although all of them were negative. I like to look at new highs and new lows, and the reason for that is bull markets are built on new highs. I usually look at the 12-week new high minus new low. I got the NYSE here very minimally positive, the same as the NASDAQ. That was a bit of a surprise to me. I like to then look at the 5-day move and see how did the market do over the week, not just on Friday. And you can see volatility was up 4.6, dollar was up, and all the major indices were down, and Bitcoin was down 3.34. Significant moves. Diamonds over 2%, 1.6 down in the Russell, 1.5 on the Spider, 1.3 on the Qs. So it was a softer week in the market. This here is a great tool. It's an adaptation of something that Sagar Nandi did in his wonderful Q Edge tool, where I took the S&P 1500, but also the NASDAQ composite and the NYSE composite. And I asked the question, intraday in blue, prior day in gray, intraday in green, prior day in gray. How are we doing? We had 2/3 of the sectors up, no difference between Friday and I guess Wednesday, because Thursday was a holiday. Industry groups were at 53%, and the S&P not as quite as strong as Wednesday, and it was a 50-50 day in the S&P 1500 where half the stocks were up, half were down. You could see the NASDAQ was clearly weaker on Friday versus Wednesday. Only 39% of the stocks were up. Likewise on the NYSE, only 43%. So more stocks down than up. That's a negative day for most portfolios. Certainly was not a strong day in my portfolio. The week wasn't too bad. When I look at the one-day change, we could see there were a number of things that were positive. But when I look at it, take out energy for a second because that's being whipsawed by war news. You had staples, financials, utilities. Those are defensive type of plays. While here you have technology, communications are in the negative camp. Over 5 days, and these are the S&P 500 sectors. We'll talk about different groups. Over 5 days, the only thing that was up was energy, as I said, probably related to warmongering. What's interesting, looking at 2 months here, or the 50-day change, um, look at the move in technology. 33% move in the last 50 days. We've had some big moves and a big rally here. If you look down here, you can see that over those 50 days, what has not one second. What has not participated in those 50 days are defensive, healthcare, staples, utilities, and real estate. They've participated, just they've underperformed. And healthcare has not participated whatsoever. This helps me understand what's working in the market. It updates real time. As I mentioned earlier, our data pull is real time. But I'm an end of day trader, and I really want to design something that was, I know you're going to question the word affordable, but remember you're getting data that's updated real time. All you got to do is click on this during the day, and it takes about 5-10 seconds, and it will update the data on a page with what was real-time data. And I think that works well. And all right, let's see what else we got here. Sorry, I'm looking at something that popped up in one of my alerts. All right, so what else do we have here? We have some themes, and you could see on the one-day change, home construction, that's interesting. That's been a laggard. Aerospace, retail, social media, and MLPs. And you could see laggards at the bottom on the one-day change. We have a weirdness with some of these column changing. We've asked the vendor that we purchase it from and working on that. You could see cannabis, uranium. Uranium, which has been a leader, was at the bottom. Copper, China, which has also been a leader. So definitely a different day on Friday than we've seen over the last couple of weeks. If we go and we look at my timing model, you'll see a change. And the timing model on the daily model, we have now lost the spider. Now has a sell signal on the daily model. Not quite yet on the Qs, not quite yet. But you're also in a sell on the daily on the Russell and the diamonds. When I look at the weekly, you're still in a buy on each of these. So right now it's called a pullback and an uptrend. And we'll see, but I think this market clearly is under pressure. Let's take a look at the market. Let's look at the US indexes, and let's blow them up one at a time. Spider, here's my thoughts on the spider. You could see that, oh, it's not going to let me do it. Okay. Well, that we are below all-time highs, which is right up here. There's also an area just below here where sometimes I pull this line down and I'll look at it, which reflects, I didn't want to pull it down that far. This was sort of a triple high or double high. And, the question is, are we going to be able to get through there? Well, I think the market has changed now. And let's see, so let me do this. And now you could certainly call out that we have a new trend line. And that trend line is telling me that we have now turned down. And I think we're going to have to get above that trend line before we can go on to new highs. So now the question becomes, are we going to pull all the way back and retest the 200? I think that's not impossible. We've broken through the 17. If that doesn't hold, then we've got the 50 underneath. We certainly got a big gap area here that we might want to have to fill. Or do we rapidly reverse, go on to new highs? I think right now, I think we're pulling back. So that is the spider, and you can see the spider was down 0.5% on Friday. Let's take a look at the Qs because I think you're going to see a theme here. The Qs, here's the all-time highs. So I thought maybe we'd get an assault on them. And now the question has to be, rather than going to all-time highs, are we having to look now at the fact we've got a new downtrend? And are we going to be able to get through this anytime soon? Or are we coming back to visit down here? Again, we have a big gap in here we might want to fill. So short term, we've turned down. It doesn't mean we have to go down. But I think we have to be aware that maybe that's the path of lesser resistance. If we take a look at the diamonds, and what do we see on the diamonds? I'm afraid we see the same thing. And I think that all-time highs are up here, and we're well below that now. And you have to wonder, are we in a scenario where somewhere in here I can find a line and start to say that that's now the line in the sand. And until we break above that line, we're heading down. Now, diamonds are worse. They've already broken the 200. So you got to wonder if we're heading towards that 50. So I think the markets are a little bit under pressure here. And that's tempering my enthusiasm for new highs. And I did raise a little cash on Friday. I had a bunch of things expire, and I took advantage of, frankly, of expiration and took some profits. And instead of just running things farther. So I'm just looking at the various potential trend lines here. I think that this is the one that I'm going to be watching right here. Let's turn that into red. And let's take this longer term one out. So I'm looking here. Again, we've got trend line resistance on all of these. This is the Russell. It never made it above the 200. And that is certainly something that has to make you feel a little bit more concerned. This makes me feel a little bit more concerned over here. So all the markets have overhead resistance. All the markets seem to be failing, the major markets, before they get to all-time highs. Is it just a small pullback in the setting of a March higher? Look at that big move off the bottom. Time will tell, but I think it's time to have a little bit more caution. If I look at the VIX, you'd expect the VIX to be moving higher here, and it really hasn't. It was up 2.5%, but it's sort of down in its, it's above its resting phase, but it hasn't made a move. And as my buddy George Lee used to say, when the VIX is high, it's time to buy, like when you spike, and when the VIX is low, look out below. Is the VIX starting to move higher here, which is when it's going to pressure the market. And then if we look at the dollar, I think we've really benefited from a weak dollar from a U.S. market. We're bouncing around off of a bottom. We still got to get above the 50. Clearly, we are in a pretty significant downtrend on the U.S. dollar. And again, that's probably helping the markets here, but we're probably getting or breaking through or about to break through potentially important trend line resistance here. So we'll be watching the dollar. So assessment on the indexes. Indexes have turned down, and I think we have to be cautious is a good word. Commodities, with weak dollar, you'd expect strength in gold and silver. And you had a failed breakout. Failed breakouts are not good. You had gold had a wedge pop, ran up to all-time high area, and has pulled back on Friday. It was up a little bit, I believe. Was it up or down? Down 0.06. Silver, same story, failed. And still, they're still up above their, this was down 1.65, above their 17, just off of all-time highs or recent highs. Silver 2011 high was just stupid high. But they've weakened a little bit. Oil has run up on the warmongering. That probably hurts the market, up 1%. Natural gas fooled us and then had a reversal down pretty strong on Friday. And then if you look at the 10-year and the 30-year, the 10-year was down 0.18%. It gapped up on Friday and closed down. You look at the 30-year, it gapped up, but it still closed higher. up 0.06%. So I think 5 is the magic number to me on the 30-year. As long as we stay below there, we're probably okay. We did okay on Friday. If we look at my buckets, I'm looking for extension. I'm looking for evidence that we're going to have a reversal. 9% of stocks below the Bollinger Bands on the NYSE, 9% in the S&P 1500, 10% on the NASDAQ, and 8% on the Russell 2000. So a week in some. None of that is evidence of a or any of a breakdown. So I'm not sure I would do anything or say anything about that to say except we shifted to the left, which is weaker, but nothing that says a reversal is imminent. Market breadth is a tool that combines a lot of my favorite indicators. You can see we're breaking down clearly here on the NYSE and on the NASDAQ, consistent with everything we said. It was an options expiration date, so you'd expect higher volume than normal, and you saw that here on the NYSE, and the NASDAQ was actually up a little bit in volume as well from average. You could see that the stocks above the 20, 50, and 200 are drifting lower. And if you look below, new high, new lows, as we talked about before, very minimally positive. AD lines were negative, but not greatly, and up-down volume was negative, and I don't see any new signals down here. I put this all together, as I said before. We have a market uptrend under pressure. I think there's enough damage here to say that we might pull back to the 200. I raise cash and I'm a little bit cautious on unless I see something significant change on new position entering. Ratio charts are a tool that I use to look to see what's leading. Remember, this is relative to the S&P 500, and it's pretty clear who the winner right now is. It remains XLK, which is technology. Technology is leading. We're going to look to see this week if the market continues under pressure. Will staples, utilities, real estate, and healthcare show us any strength? Really haven't done much yet. They would lead if the market's rolling over. You could see strength in energy as it's come off the bottom, and even financials as some of the big banks, Bank of America, look interesting here, and we saw some strength in the regional banks. So that is my market assessment, and then I go to what I call the JAS layout. Now, a couple of things. If you have the product, you're going to wonder what these lines are and what these little arrows. Please ignore them. That is John Person's indicator package I've started to build into my layouts. It will be potentially the first outside educator. We've built it for John. John will have to let us know how he wants to bring it to market. Is it going to come to market as an add-on? Is it going to be a freestanding product? I'll be honest, I love his tools. I've known John for a long time. I've been to a lot of his education, and I'm so happy that we've been able to build it. Now he's got to figure out what he wants to do with it, and that is 100% his decision, not mine. You could see my list here got a little bit bigger this week. That's interesting. You could see here that we now have over 3,800 stocks. How does that change week to week, and why did I say it got bigger? Well, because it was 3,600 last week. Basically, we take the Amex, the NASDAQ, and the NYSE. We then filter for 100,000 shares and a $1 cost, and that's what makes it into my list. That's not necessarily what I will trade with. If I go into the top-down list here, this is going to take every one of these stocks. In fact, you could see everything is in a sector and an industry group. So we're talking about Jefferies 3,800 here, not the S&P 500. And we can stick them into sectors, and we can look at performance. We can look at industry groups. So every one of these stocks is in a not a second. There we go. Is in an industry group and a sector. So the first thing we could see is staples, financials, discretionary. That's interesting. And communication were up at the top. And if we look at the industry groups, you could see the leaders here. Let's look at two-day momentum instead for leadership. So we got interesting cyclical and defensive financials. So financials are persistent. So what I might do as a top-down trader, I might take the top three groups, and this shows me the industry groups that are in those top three groups. And let's take, again, using that 2-day, and let's just take the top 10. 1, 2, 3, 4, 5, 6, 7, 8, 9. So I've got 173 stocks in the top 10 industry groups in the top three sectors. And this might be a good place to start to work from. So let's rank them by, let's go by Let's look for pullbacks and uptrend in this group. So pullbacks and an uptrend, and let's put on $5 and 500,000 filters. Let's hit OK. And these are some of the stocks that showed up. Let's rank them by up dots. And let's just look at them. Kroger's, I know I like Kroger's. I've looked at these stocks already. And why do I like Kroger's here? Talk about that. Oh, you're not going to work in this fine. Okay. Huge uptrend, a pullback, and now I broke out above the 50. I liked the breakout. Look down here, massive volume. I'm in an EMS, which is the green line. I had a CPR fire. I had gap, volume, breakout momentum. Relative strength is breaking out above the moving average, as is OBV. It does have a person buy signal, but we're not talking about that today because that's not available to you yet on this product. In this, we clearly, let's see if this will work. I mean, we definitely have broken out of a trend line here and probably a wedge pop. I think that looks great. Look at that volume. Next one is Mondelez. So these are defensive names, aren't they? Kind of a base. Looks interesting as well. It took out over the recent highs on volume, CPR, volume breakout momentum, then relative strength improving, OBV, and not extended. What's next? CarMax. This is one that's going to put this up on earnings. So I can come in here, open up the earnings tab. I can see earnings came out 620. That was yesterday. I can see it was a 42% improvement, a big surprise on earnings and on revenue. I can look at the forward PE is 16. It doesn't pay a dividend. No wonder it had a big move. Those are really good earnings per share growth. And when you see persistent changes here and you see, look at the forward PE, that's kind of exciting to me. So that looks interesting. I just don't like buying things that are down like this, but I have no problem with this stock. In fact, I might want to come in here and draw these trend line. And maybe what I would do is set a buy if it breaks above that. Royal Caribbean, probably the best stock company, not necessarily the nicest cruise ships. It's just like a cup and a handle getting ready to break out. Decent volume, breakout momentum. You see this green line over the yellow? That is one of my proprietary indicators that I learned from a guy at HGSI World named Chris Wilson years ago. So it's his proprietary indicator. But basically, I'm showing you that the spider relative, the stock RCL relative to the spider has broken out above its moving average, as is his OBV. I really like this. This is Royal Caribbean. DHI, home builder. Boy, I have a hard time buying down here, but I've noticed that the home builders were stirring. VIK is another cruise line. I like Royal Caribbean more, but again, the similar pattern in breaking out here. Ulta, the cosmetics, big gap up, I believe, on earnings. Another thing you always look at is news. And if you like something in the news here and you click on it, we'll actually bring it up for you. Press and hold, prove I'm a human being, because it was sort of the program drove me to there. Let's see. But you do that and you should open up the real news story. Let's go back to that. Sorry. And there's the news story if you want to take a look at it. All right, that's pretty cool. TD up, thread up. This is a small retailer, $8 stock. What a beautiful move. Looks interesting here, breaking out. Coinbase, we know this is up because of stable coin. I think there are probably other things that benefited from this, including Robinhood had a great week, even though it had dropped originally because it wasn't added to the S&P 500. A nice breakout there on Coinbase. Ali, looks like it's stirring as well. Took out this line here on Friday, closed at the highs. Let's see about earnings on this puppy. Earnings are August 27th. They were out June 3rd. You know, not big earnings per share growth, definitely slowing down. Revenue, not great. Don't understand why the stock is doing so well, but I'm a technical guy. I don't really care about fundies, except I do like earnings growth. All right, that's Ali. LE, this is in the uranium space. Excuse me, that's LU. LE is Land's End Retailer, coming up off the bottom. JFBR, Jeff's Brands, nope, that's not mine. And then ICE, Intercontinental Exchange, are some of the others that made this scan. All right, but no dots on the last four. So that's one way I might look at it. Another thing I might do is let's just kill the pullback and uptrend. And then I might look at 2-day momentum and just see if any of these look interesting. Carvana, if you believe in their story, you have a chance to buy it after a pullback. There's CarMax. Let's see, CME looks interesting here as well. Now I don't like it because it's way off its high, but I really like this candle on massive volume. Relative strength looks like it's ready to start moving up as well. And OBV is good. So I got to ask why. So I'm going to go look at earnings. Earnings didn't come out. Earnings have been okay. Then I'm going to go over here and look at news. Conference call, well, that shouldn't drive it. Don't know what turned it around, but I do like this reversal candle here. Remember, opened, traded lower, and closed higher on a bad day in the market. Sprouts Farmers Market, another food store. We already looked at Kroger's. Nice uptrend pullback. Big volume move on Friday. Another home builder. Again, it's hard for me to be chasing home builders here, but at some point they're going to go higher. I'm seeing the right stuff. Relative strength getting better, OBV getting better. Something Costco, the one that I have a hard time understanding the pricing of this company. Maybe it's because they sell gold, but and my concern on Costco is just the earnings per share growth is relatively tepid considering the fact that it gets a big multiple, it does pay a dividend. It is, however, probably the best. That's why Robin was up a nice upgrade here. Um, Costco of financial services. Isn't that interesting? That tells you what people think about Costco. When a compliment to Robinhood is that it's the Costco of financial services. So I can go through this list. Let's see if there's anything else here that I saw that I really liked when I went through and looked at stocks. We'll come up with some of those in a few minutes. Albertsons, which is in a potential takeover by Kroger's, is probably going to react a lot like Kroger's. We said Kroger's look good. I don't know if I showed you. I did show you Kroger's, but let me just put it up again. I thought I showed it to you. I've looked at so many charts this weekend. You see that big breakout on Kroger's. All right, so one thing to do from a top-down perspective is to look at some of the stocks and the groups in the industry, in the sectors and industry groups that are moving up. I'm a top-down guy, and that's how I like to start my analysis. Now, I could do other things. I can go to just the industry groups and rank the top 10. Right now they're all ranked, and now I've got all the industry groups, not just the ones in the top sectors. Let's just look at the top 10. 1, 2, 3, 4, 5, 6. And you'll see why I go with the sectors. There'll be a lot of the same stocks here. Let's rank them by 2-day momentum. GMS, is this that home building? Yeah, this was a Home Depot's buying them. They don't count. They count, but they don't count. I don't chase things that are being bought unless there's a reason to think there is a reason to think that there's going to be a bidding war. There's coin again, which we looked at, top build, BLDR. Um, you know, I don't know if this is up in sympathy, and I can look here and get a look at earnings per share growth. Doesn't look that good, nor does revenue. It's really come off its highs. Forward PE at 12. It's probably is a value play here. I gotta believe it's up in sympathy on that takeover. So that would keep me nervous. Now, what I like to use for forward-looking earnings And I think I'm going to talk to Praveen and see if we can add more forward stuff. But I really have always liked market surge. I've got it open on another computer. I don't think that'll be a problem. It'll just switch it to this one if I'm right. So I'll typically, well, I like this for a number of reasons. One thing I like is tells me the volume. And you can see the NASDAQ and the NYSE volume were up. Of course it was up. It was quadruple expiration day. But I'm going to open up the charts piece, and I think this was BLD. Let's pull this down, and don't need this. And it shows me not much, 8% earnings growth from 25 into 26. It's still a $300 stock. I think that's probably expensive. Technically, I think it's at an interesting point, and it's probably worth watching. And I think that if the housing market improves, maybe it's more than just worth watching. But I think you got to be aware of what you have here, and what you have here is a stock that's in a profound downtrend in a group that's been out of favor. So something to watch. Maybe move that thing to this. All right. LEU is what I was thinking about before. This is in the uranium space. I don't like that candle. After a run like this, you got to be careful. And you could see the high jumps at 100%. Here's Kroger, Netflix, one of the FANG stocks. Pull back some. This has certainly been a leader. CarMax, NXT, Nexstar Media. Well, let's see. Got to break above that for me to be interesting. LII, Lennox International, another thing related to home builders. There's Royal Caribbean, Sprouts. FWONK looked interesting. Taking out this line here. Prior highs. Formula One Group. Oh, okay. Well, my partner and I, from our company, we actually sponsor a Formula One driver, and it's not a shocker how much money is coming into Formula One. It's hard to buy it on their fundamentals. It is a great growth area, and it's not just a U.S. story, which is we're very interested in that. You could see some of the others. Rocket. This one looked interesting here. The rocket companies. I've never understood why this thing hasn't done better. This is, I think Dan Gilbert's started this. A Detroiter. I grew up in Detroit, suburbs of Detroit, so I pay attention. This is a stock that has pulled back, broke above the 200. It's not extended. It had breakout momentum, CPR the day before. Something I'll be watching. So that's top-down approach to the market. Top sectors or top industry groups, finding the leading stocks. Now, I also have that I can't help myself. And the can't help myself is, I like to look at it from a more broader perspective. Let's take a look at the impulse list again. So here are several of my tricks from a bottoms-up perspective. Number one, let's go back to what we just did. Let's go back, add pullbacks in an uptrend, hit OK, rank them by number of dots, because now I'm bringing up stocks that are the top stocks that are in an uptrend, pullbacks in an uptrend. Kroger, as we talked about already. Gorilla Glass, or Gorilla Technology. I like this move here. Look at the massive volume. All the dots are positive. Relative strength of OBV looks good, not extended. You come up here. Hard to see why the market was excited, but look at the surprise. It did much better than the market expected, so this is an earnings-driven move. Nothing wrong with that. Wheeler Real Estate, I don't know this company. I don't even know what that had to do with it. Under Armour showed up on a bunch of my scans. You got higher lows. We'll see if it gets a higher high. My concern is the 200. You can buy things under the 200, as John Person pointed out at the meeting. I prefer to buy uptrends that are above it. Here's another Under Armour version. Looks similar. We looked at a couple of these. CarMax, base. I haven't looked at base. What is base? Couchbase. Oh, this must be either, is that a takeout or is that another stablecoin story? News of a buyout. We don't play buyouts. APG is an oil services company. API Group. I thought it was oil services. Oh, coming into the S&P Midcap 400. All right. Renewable energy and transmission. This is a news-driven thing. We'll skip it. And I go down. I know Steak Shack looked interesting. Here's prior highs. Cup, handle in a breakout. Volume is okay. Volume breakout momentum. Relative strength OBV looks good. Rocket Labs, I thought looked interesting as well. Cup and a handle and a potential breakout. So there are stocks that look good despite my concerns and uncertainty about the market. Everybody watched me 3 days ago when I called out on this day here, Oscar breaking above the 200 with the two dots in a row, and I said I was going to look at that the next day. Boy, 16 to 21 in 2 days. These when you get multiple of these dots in a row, I take it seriously. We're going to look at that scan in a few minutes. Another thing that I like to do from a top down, I'll just go right to that right now, is I like to look at those 2 days of momentum. Why? Because what you expect after a big move is to have retracement and a bit of a pullback. And when you get a expectation breaker and the stock goes higher after 2 big days, something's going on. Well, this one had 3. Let's look at what we got. We got that GMS, which is a takeout, so we're not chasing. Rocket Lab, which I mentioned a few minutes ago, you could see those 2 dots here out of a squeeze. Relative strength OBV looks good, not extended. MTB is a bank. I said some of the regionals look good. I'd rather it was above the 200, but gosh, the volume, breakout momentum, relative strength OBV, and it's got the 2 dots. I like that. MedPace Healthcare, kind of going sideways. Look, the 2 dots make me pay attention. CommScope, a lower cost stock. Let's just make some trend lines. I'm just curious here. Take that one through. So it broke out of what was resistance, failed here. That looks interesting. The 2 dots in a row, relative strength OBV, not extended. That's a cheap stock. NWSA, News Corp. Then you have Dr. Pepper. Wouldn't you like to be a Dr. Pepper too? Hinge, which is a healthcare stock I don't know much about. And then probably one of my favorite charts of the weekend, Booksy. Breaking out over after recent resistance. It's got my 2 dots in a row, which to me is a big deal. Relative strength OBV and not extended. Boy, we actually found quite a few nice stocks from this review. I found more nice stocks than I think I'm interested in buying. So let me show you something that's going to be new. I take off my filters. That's one thing I have to always remember. I'm not good at that. I'm just not good at remembering. I will be sharing my list automatically with everybody of the stocks that make my buy watch list. Let me tell you what this buy watch list means. It means nothing. It means that I found these stocks. A lot of the names are the names we've already talked about. And I want to see what they do on Monday. Now, a couple of them, like Booksy, which I like a lot, or Black Sky, I call it Booksy, Black Sky Technology. I bastardized that name, didn't I? I will actually be putting in a potential trade on. But you're going to see here a list of the stocks that I thought were interesting. We are going to be sharing this list with everybody. So I'm not vouching for any of these stocks. These are stocks that had a pattern that I liked, and I'm going to share them with all the people who have Market MRI Pro. So I mentioned I like Bank of America. I liked it better on Thursday night going into Friday, and I took a position in it. But Bank of America, you could see, has got a little breakout here. Relative strength and OBV look good, and I like the fact that it's not extended. Here's your black sky, which I've been bastardizing and calling Booksy. Here's your CommScope. EQT is a natural gas play. Um, and natural gas looks like these stocks have broken out. There's another one here. Let's see if I can't remember what it's called. It's got a name that didn't really tie itself in my mind to being a energy play. Let's see if I can remember what it was, but I think it's on this list. GXO. What was GXO? This is a logistics company, and I think increase in trucking opportunity, a nice uptrend here, broke above the 200, massive volume, all the dots lit, relative strength and OBV, not extended, and I come here and again naturally look at earnings. Earnings came out in May, so that's not the story. So now I'm going to go over here and make sure I didn't just tell you a buyout. Name new leader and regulatory to integrate a big acquisition. Celebrating the, all right, saying shares up 11. Well, that's news that's probably sustainable news. We might want to watch that guy. So GXO looked interesting here. HIMS, I questioned their business model when they were doing the compounded GLP drugs, but now they're moving to a model where they're actually going to work with the pharma companies and make it easier for users. I kind of like this. It's got some great earnings coming into the stock. In fact, let's pull up here, HIMS. $141 growth, but even 42% on a dollar. I would pay up to twice that. I think the PE is high. Look, it's expensive, but it's growing and it's still young. I love the name of this guy in the insurance world. A lot of insurance names look good. This is Lemonade with a nice breakout here. Notice how many of the ones I like have the John Person signal. There's a reason why I like them. Here's another, I think, good looking insurance related company. Berkeley, you've got a pullback here, and you're taking out resistance in a flag after a nice run up. Zeta, I believe, is another one in the trucking logistics world. It's a bottom fish, but look at the volume that came in. Williams WMB is a stock who's an MLP, which tells me it's probably relatively a sideways mover, but pays a dividend. Come on, WMB, give it to me. Oh, come on. Sometimes this thing slows down a little bit. Let's try something else. Sezzle, this is one of my holdings. Are we going to struggle here? Let me flip to this version. Let's go back to the buys. This is how you import a list. And now you're going to see it show up over here, which is going to be the list that gets shared with you. Unless Praveen is doing work behind the scene. There we go. So I was trying to pull up, let's pull up Sezzle. And you could see what amazing looks like. Let's look at the story here. What am I looking for in these? I'm looking for big volume days. I'm looking for lots of blue dots. I'm looking for relative strength breaking above the moving average. I'm looking for OBV, and I'm looking for things that are not extended. You had the opportunity here. Okay? You had an opportunity here. That's what I'm looking for. That's my favorite pattern. So Williams, I wanted to show you that one, which is the MLP. I know on Saturdays, Praveen, he's already started texting me. I'd asked him a couple questions. Is probably doing some updates to the program. which is why it started to slow down. There we go. As I said, it's going to be kind of a flat mover, but look at what it does up here. It pays a 3.5% dividend. All right, are there anything else here that I really liked a lot that we haven't looked at yet? INOD is one of the rare healthcare stocks, I think, that we have. Actually, it's technology. I thought it was healthcare. Um, Again, I like trend lines. It's probably too far up to draw from, but we're breaking out from that line. So INOD looked interesting to me. Notice relative strength at OBV starting to move. And I think we've looked at most of these. So have an unbelievably wonderful rest of the weekend. If I don't do something next weekend, which I will, but if I don't, have a great 4th of July, be safe. And just go back to where we started with, I just want to remind everybody that you'll see in, hold on a second, I need to go slideshow, current slide. You will see in the remarks section about this launch webinar, and if you're interested in a free trial of my tool, just reach out to me at marketmripro@gmail.com. Again, you'll get a discount based upon 4th of July, and if you join Top Down Trader Group, if you have my other products, you'll get the lowest of the available price based upon this deal or what I do on the stacking discounts. And there is an annual fee for data, which will be in the $4.95 to $5.95 starting in a year. Everybody have a great weekend. Thank you.